Agent network management is considered one of the greatest constraints to expanding mobile money and agent banking rollouts around the world. In 2013, we launched the Agent Network Accelerator, known as the ANA Project, with support from the Bill and Melinda Gates Foundation. It is the most ambitious research project in the world, focusing on distilling the operational factors in agent networks that lead to success. In 2013, we operated in 3 key markets, namely Uganda, Tanzania, and Kenya, collecting over 7,000 agent interviews. And what I would like to do is briefly share some of the insights that are emerging from this research, which we'll be closely watching in 2014. The first is really the evolution of the network itself. What we've seen is providers come into countries and they look at the FMCG networks, the fast-moving consumer goods, these retailers selling soap, shampoo, Coca-Cola, and they look to build on top of them, enabling them to then provide cash-in, cash-out services for digital finance. What's happening now is potentially a next evolution where they're asking them to do merchant payments, accepting digital currency for the goods and services they're offering. The fundamental paradigm shift here is that when they were offering cash-in, cash-out services, they were being given a commission for providing those services. But now, when accepting digital currency as a merchant, they're being asked to pay fees. So we have yet to see if this value proposition will actually be interesting enough to them to forego some commissions in the short term to potentially be part of a greater evolution in this ecosystem. The second is interconnectivity. 2013 saw a lot of exciting developments, with banks aggressively expanding their agent networks and telecoms expanding in markets that already had high levels of penetration. What this has been doing is putting pressure on the agents. Agents that were serving one provider in the past are now serving multiple providers. And on the back end, there's a big issue because these digital currencies aren't exchangeable. If you have Airtel money, you can't exchange it for Safaricom money or MTN money. And so these agents are holding these little siloed pools of liquidity. Now we're seeing solutions to this as super agents are allowing agents to exchange liquidity on a more of a macro level. And as the increased market penetration of these services increases, the focus on these types of solutions will need to evolve as well. And so it's something we're very interested in. The third is what we're referring to as liquidity tethering. And now it's ironic because when people look at a country and they see low levels of financial inclusion, they say, oh great, there's a lot of market potential here for digital financial services. And it's true that agents are transacting with digital currency on the front end, but we have to remember that on the back end, they're moving a lot of physical cash around to keep that balance in their tills. And this means depending on the physical financial infrastructure of a country. What we see geographically is agent clustering around these financial points, where they want to be close proximity to places like banks where they can go and easily move their physical cash. To really expand the reach of these networks to those hard rural areas we've always meant to reach, we need to solve this problem. We're seeing a lot of great solutions out there. We're seeing providers have people deliver liquidity on motorbikes to hard to reach places. We're seeing agents enter into informal agreements with each other, with surrounding retailers to help them rebalance in the places where they're doing business. The last one we really want to focus on is fraud. Now in the 3 East African countries we went into, so the most developed in the world, all of them noted fraud as the biggest issue impeding the development of the networks. And this has a lot of implications, and we've seen a lot of scams out there. Everything from people working in teams, doing confidence scams, people using false currency, and people posing as providers to gain access to tills. What this says is we not only need to focus on the induction training for new agents, but really focus on monitoring throughout their life cycle and keep clear communication channels open with them so that we can give developments to them as they're happening in real time. These are some of the most important contemporary issues now facing agent network management and therefore the evolution of digital financial services. These are problems that are global in scale, and they really necessitate solutions that are local, that really respond to the dynamics of any given operating environment. What we did in 2013 was we also founded the Helix Institute of Digital Finance, where we're leveraging 15 years of consulting experience at Microsave, along with these emerging insights from the data, and really helping people tailor solutions to these issues. In 2014, we'll be offering this course 4 times. Please come and learn with us.